Yeah, welcome everybody. Today we want to talk about the tokenization assets, which is strongly in line with digital securities, security tokens, securitization. These are all words which are very regular being used jointly next to each other. At the core, it's tokenization of assets or digital securities. That's basically bringing existing assets in a regulatory compliant format on blockchain system, right? With trading, without trading, and so on and so forth. That's what we will discuss. We have a couple of very good experts here in the field who have strong touch points with the tokenization business, with the financial background, and so on and so forth. So let's directly start into the topic and maybe ask everybody to briefly present himself or herself. Maybe Enno, would you like to get started presenting yourself and also your company briefly? That's what we will discuss.
Hi, Philip and everyone. I would love to introduce myself, and I'm very pleased to talk to everyone right now. Thank you, Philip, for the invitation. I'm Enno. I'm the co-founder of Hardstocks, and Hardstocks is the first company to bring equity as a shell company and use it for tokenization of assets. We needed to go to Liechtenstein with our small startup because in Germany, we right now don't have the regulation to tokenize equity. We just have the opportunity to tokenize illiquid debt products. And this is the reason why we went to the small company with 38,000 inhabitants to bring equity on the blockchain. And right now we're using it to transform any asset in the world as fully regulated tradable stock in a banking infrastructure. And this is what we did with a strong focus on regulation, with a strong focus on an infrastructure that you can bring a holistic financial product on the blockchain and use it to transform any asset in the world to an equity financial product, as you know it right now, just more efficient because we use the blockchain.
Perfect. That was a nice pitch. Who wants to go next? Seamus from the custody side.
Yep. Thanks, Philip. So Seamus Donoghue, I'm the Chief Growth Officer at Metaco. Metaco is a software technology company based out of Switzerland. And we provide, let's say, cornerstone or foundational infrastructure to firms that want to be custodians. We work with some of the largest security services firms and capital markets teams that are looking at tokenization, such as SocGen's Capital Markets Business Forge, Citibank, and BNP, and provide them the core custody infrastructure, which is the foundation for anything related to digital assets, be that self-custody or sub-custody. And importantly, we provide a secure governance layer on top of that enables them to securely manage all processes, be that managing keys that are on chain or interactions with smart contracts. So everything around fine-grained policies around, for example, asset servicing or corporate actions.
And Seamus, you are in touch with numerous financial organizations. So you cannot name too many things, of course, but you also hear a lot and have a very good opinion from the market. Same way as with Volker from a consulting company. Maybe Volker, please also present yourself.
Yeah, thank you for having me. My name is Volker Lehmann. I work for RFB. We're a management consulting and working in the blockchain area. And I have the pleasure to work with Philip together in a training session for executives at the Frankfurt School, the Digital Assets Seminar, where we focus on executive training and bringing the things they need to run this business on an executive level. And we did at IFB also some tokenization using ERC20, ERC 721, and so on. Thank you.
Excellent. Thanks. And finally, Valerie from Commerzbank, but she's speaking here privately today, but you have to explain this yourself.
Yes, thank you, Philip, for the invitation. My name is Valerie von Lucke. I'm chapter lead in our DLT lab and have been involved in the DLT activities of Commerzbank pretty much since the beginning, end of 2016-17. And at the moment, we are working on three main topics, which are, of course, digital assets, digital money, and digital identity. And I think for the topic of today, it's clear that all these three different main objectives we have to realize with the new technology have to be combined in an intelligent way and also complying with the regulatory environment we have. And yes, I want to add that everything I'm saying here in the panel is on my own behalf, on my personal behalf, and not on my employer's behalf.
Excellent. Perfect. So who have we here? We have Valerie working at a bank here with regulations, stock market listed, and so on. We have people from the consulting domain here, people from the custody side talking to endless banks and financial intermediaries around the world. That's Metaco, and also Enno from a tokenization company. You all are, by the way, also supporting us on behalf of the Blockchain Center. Thank you to all of you. Without you, we wouldn't have had the possibility to do all this knowledge dissemination and so forth. Just remember, also mentioning this because it's sometimes too rarely mentioned. Let's now start directly into the topic. As I said in the beginning, we have tokenization, securitization, digital securities, and security tokens. What do they mean? Are they maybe meaning all the same, or are there some nuances or some differences? Maybe Enno, would you like to give it a very brief structure?
Yes, I would like to, Philip. I would say these 4 words are just buzzwords used right now in the market to describe the same. I mean, some are the progress things and the actions things, the others are the result. But in the end, it's just always about bringing traditional assets from the traditional market to an on-chain world and using the blockchain to gain efficiencies, to gain access, and make assets which were tradable just in the unit size of 1 to the size of 0.1 or even further, so that we can transform any asset in the world to a tradable, smaller unit and make it accessible for everyone. This is the technical approach. But in the end, if you do so with a traditional asset, you always have a financial product. And the financial product is always a combination within a technical approach and also a regulatory approach. And tokenization is just the technical approach, and you always have to combine it with a regulatory approach, because in the end, it's a financial product based on the blockchain if you use tokenization or you have a security token. So you need to fulfill both parts, the technical part and also the regulatory part, to tokenize any asset, bring it to the blockchain, fractionalize it, and afterwards have a financial product asset on the blockchain.
Yeah, I think that's very interesting. You mentioned the technical part. That's what you would call tokenization, and you would mention the regulatory part. That's the word digital security. And I would now say, after what you have said, with the word tokenization of assets, you have basically both combined, the technical part, tokenization, and the regulatory part, digital securities. What about the word security token? I think it's an old-fashioned word, if I can say this. It's from the pre-corona area, where we thought that security tokens are the next big super thing. But at the end of the day, it's digital securities, right? Valerie, we talked about it previously. You have a very nice definition for tokenization, right? Would you like to add some points here?
Yeah, it's just a very brief definition I would use. Tokenization is just the process of creating an asset representation and related information, and especially rights in a digital form usable on blockchain. That's how we would see it. And that could, of course, apply to traditional products like securities, which we have today in often also still physical form. But it can even apply to assets we are not yet even in touch with as a bank, or not yet even offering to our clients. So that's how I would take it from the definition side.
Yeah, makes very much sense. So the definition of tokenization thereby leaves basically aside the regulatory part. This is what we have discussed previously. I think that we have a common understanding of what we are talking about. Let's move on and discuss where are we standing currently with the topic around tokenization of assets. What's possible, what's not possible? Does it work? Does it not work? Or what works, basically? Seamus, and then maybe Volker afterwards. What did you hear so far from the banks, from financial service companies? What works? What does work? And where are we coming from? Where do we stand?
It's a great question, and I think to a degree, basically, your first question provides context of where we stand. There's still not necessarily a common definition of what we're talking about that we need to agree that to start with. So I think one comment I would say is we're early. You made a comment about the big excitement before. It's been a big excitement in the past, I would say, and I kind of half jokingly say tokenization is always the big opportunity. Has been in the big opportunity next year for the last 5 years. It's still a very big opportunity. I mean, we work, as mentioned earlier, we work with some of the largest banks that are entering the digital asset space, particularly focused around tokenization. And I was at Sibos a couple of weeks ago, and I would say basically that the topic of tokenization was probably, or digitization / tokenization was probably the majority of the subject matter. And that's very unusual for a payment-based discussion, which is normally Sibos. So I think it's coming to the mainstream. I think it's still early. And to my point about, what's the common definition, I think the main issue is tokenization itself is fairly trivial from you're taking a real asset and providing a trusted bridge into this digital asset space, or creating a native token in some form. But there's an issue of the market having the ability to manage what are new processes, meaning managing private keys at rest, managing all the processes related to private keys, because in the end, we're moving into, whether it's on a permission or public chain, there's various levels of security, but in many senses is a bearer asset that's controlled by private keys. So that is fundamentally different. The bank's core infrastructure need to get there. I think we're seeing more banks get infrastructure so they can actually do something in this space. And we're seeing more end-to-end deals, whether it's the EDF deal we saw recently in France, or basically EIB's done some issuance as well with some of the banks. There have been very exciting projects, but I think the main thing is as the infrastructure comes up, there's an opportunity to create standards. So the definition was one, but I think what exactly are the definitions in this space? And there's a common standard, because I think right now the market is very much in an experimental stage where you can do the end-to-end, but there's some things missing in the equation, meaning liquid secondary markets and issuers coming to market. So I think there's demand on the asset management side for these new types of this new asset class, let's call it. But I think, and the technical capability is there. Regulations in some jurisdictions like Germany are very well defined around let's say bearer securities, but I think there's still we still need to have kind of, let's say, bootstrap the market, which is bringing quality issuers and creating secondary liquidity for issuers to actually tap liquidity.
That was a very thorough state of the market. We soon have to dig in a little bit more concerning the legal perspective, what's possible with regard to debt, equity, funds, and so on. Maybe Volker, please also emphasize what you are hearing from the companies you are in touch with concerning consulting and other things.
Still a bit tricky in the German law. You have to have a special purpose vehicle holding the assets. So there is no real ownership possible by now. And it's a great step forward that Hardstocks has gone just recently, putting it on an equity base, which is much more feels like ownership than we had through this SPV constructions everybody's using. I think it's we are in a kind of stage with we call it the Crusader principle. First line, too many losses. Third line is too late for lottering, for taking the real good assets, and we have to keep in the second line. And I think Hardstocks is doing a great job on that.
I know. What's the state of tokenization from your perspective?
Yeah. First of all, thank you, Volker, and also I would like to.
Tokenization of assets, right? I think we have to really emphasize on this word because tokenization can be anything, even crazy NFT images. So tokenization of assets. That's what we would like to talk about. Sorry.
Exactly. So first of all, Volker, thank you for these nice words regarding Hardstocks. And first of all, I would like to agree to Seamus, because he just said there is a demand of asset managers who would like to use tokenized assets for their portfolios. But now we bring together the old world and the new world. And an old asset manager just has check boxes he has to fulfill. As Seamus already said, like right regulation, tradable market, right infrastructure. And the reason why we didn't break through with tokenization right now is the reason we never, ever brought in all the aspects of a financial product to fulfill these checkboxes. For example, if you have a debt product using to tokenize an asset, afterwards you don't have in the liquid market, you don't have the right regulations for an asset manager to fulfill these checkboxes. This is the reason why Hardstocks needed to take 2 years to create a holistic product with a liquid secondary market, with a fully prospectus based on equity and all secured in the banking infrastructure. We always try to fulfill all these boxes that any asset manager in the world is able to buy our products, and that any asset in the world can be transformed as a security token or as a securitized asset. So right now on the market, you see a lot of players trying to do tokenization, but they, for example, as Volker said, use the German legislation, which is good, better than in other countries, but that isn't holistic, because they just allow you to use debt products, and also the infrastructure isn't facing enough progress to fulfill these products. For example, we have the opportunity to use DLT pilot regime in the upcoming year, but there isn't quite a solution right now, at least, how to use it and how to bring all the players together to use DLT pilot regimes. So there are opportunities for, especially in the European market, for example, Liechtenstein, but right now a lot of players fail to fulfill these boxes to bring together the old world and the new world. So for especially the institutional clients and institutional investors don't have the opportunity, even if they would like to invest in these products, because until now, not all the companies filled up these checkboxes, and Hardstocks is trying to do so, or at least did so.
Very interesting. Valerie, would you like to add something here?
Yes, maybe. If you ask about the progress or the status of today's tokenization and tokenization of securities as well, I think the progress on regulatory side is definitely there. At least I can see that for Germany, when I compare it with our first pilots, we had to operate under another legal jurisdiction than Germany, because nothing was there yet before the Electronic Securities Act. So that is definitely a progress. Of course, if you go higher up, then look at it from a European level, it has to be seen how well suited the Euro pilot regime will be for our needs and our clients' needs. So this is not yet totally clear, and of course it's more a sandbox regime. So it's also not the final solution for a certain period. It will only be a sandbox regime, and that will maybe determine how the traction will be on that side as well. Then picking up what Shemus said, if you think that technically the end-to-end solution is almost there, and with all the components from the representation of the assets in a digital form on different types of blockchain DLT up to the then selling it or issuing it and finally custodying it. Yes, certainly a lot of elements are there and much advanced compared to the last 3 to 4 years. But one element we as a bank are working on heavily at the moment is still the cash side. So there I don't see that we have the final solution yet. A robust cash on ledger solution, regulatory approved, and which can then make it a true end-to-end or the full experience. If you then want to go further with the tokenized assets, sell them on a secondary marketplace and have corporate actions on whatever kind of securities you have, there you will always need the cash component, which is not yet fully digitized or tokenized, whatever kind of concept you follow.
Yeah, interesting. You mentioned the euro on blockchain system aspect, which is yet another topic on top of the regulatory issues and all the other issues which we mentioned.
Yeah.
So and by the way, maybe quick question to all, in case we are talking about tokenization of assets, do you have in mind retail investors or institutional investors, right? My personal opinion is that institutional investors are interested, but they are not in this ecosystem yet. They are a little bit at the sideline and watching what's happening. So they are interested, but haven't moved in yet. And the retail investors, they are partly interested, yes, but they are also just interested in a specific subset of assets. You can't sell everything to them. That's my personal opinion. Would you agree? Would you not agree? What are your insights from the talks with other companies? What type of investor do they have in mind? Maybe Enno.
I would say right now the retail investor is the main object of the most players on the market using tokenization, but the retail investor is just focusing on the asset which is tokenized. For example, if you have a car and tokenize a car, every retail investor is just seeing the underlying asset, not the technology and regulatory approach which is used to tokenize the car. And I think for an institutional investor, it's quite important, the aspect of how you tokenize the car, the technical approach, but at least the regulatory approach, how you structure the financial product, what is the infrastructure? And as I already said, do I fulfill all these checkboxes? And Philipp, I would agree to you that the institutional investors right now on the sidelines, they are waiting for tokenization, and every institutional investor I'm talking to is very interested, but they always say, even if I wanted to, I don't have the allowance to get into the financial market with tokenization because the products aren't holistic enough, they aren't good enough, and I have 2 checkboxes left. This is the reason why I can't invest in the product, even though I like the underlying assets. So I would say the main topic for the tokenization market right now is to fulfill all those checkboxes, and this is exactly what Hardstocks tried to do. We want to face the institutional investor and bring tokenization to the institutional investor, also to the retail investor. But there is a lot of space in the playing field on the institutional side with tokenized assets. And for example, I would say that there are a lot of projects an institutional investor would love to invest if you use the right technology approach and also the right regulatory approach, fulfill these checkboxes, bring a holistic financial product on the blockchain, and also an institutional investor will get into the market and will invest in your product.
Interesting point. What about you, Volker, and the others? Would you agree here, or would you maybe add some nuances?
Yes, I would first touch on the retail side. I think there are companies upcoming like Yacht One. They're using this fractional opportunity lying inside the tokenization of assets. And on the other hand, we have the big German bank groups like the Sparkassen organization, the savings bank organization, and the cooperative banks. Both are working on a wallet for retail investors, and I think this is kind of a anchor product, maybe replacing the Giro Konto, say a classical account on this end. And because you have a very good customer contact there, and both are working on that. And once they take off with this, I think there is much opportunity in organizing your tokens in a wallet by a provider you trust it for a lifelong, more than 20 years. And switching to the institutional side, companies like Metaco are offering there just the services institutional investors are looking for. We, from a risk management side, the non-financial risk is not to be underestimated. It's handleable, especially with partners like Metaco. But you have to address them, and it's a lot of regulatory work to be done, and boxes to be checked by the regulators and by the compliance department. So there is an issue with a non-financial risk coming with such an investment, but from our side, we're saying it's handleable. Nonetheless, it's just work.
Yeah, good point. Anybody else, Valerie, Seamus, want to add something here from the investor's perspective?
Happy to, but go ahead, Valerie. I think you're on mute.
Yeah, I also have problems.
Sorry, I just realized it. On the institutional investor side, I think a lot of these institutional investors are still in a waiting position, and at least that's what we have seen in a lot of research report surveys, until the bigger institutions and trusted partners are having larger offers. So that's what is, I think, regarding the current situation, the time frame maybe that will still take some time. Again, as I also said, referring back to the regulatory topic we still have, which is in a very early stage, and the cash side of things, which also have all to come together.
I would agree with Valerie's comment that it's going to take institutions move at a slow pace. I mean, they have a lot of touch points, as you say, that they need to comply with. Governance, regulation, etc. But what I think we've seen in the last probably 2 years is, and particularly accelerated in the last year, is I think there's a acknowledgement that tokenization is going to fundamentally, let's say, blockchain as a mechanism to exchange value, and tokenization will dramatically change basically let's say the financial stack as we know it. I mean, I think to Valerie's point, there's a lot of things that need to come in place. I mean, you can't really have efficiencies in exchanging value if one leg is still fiat. We still need a tokenized currency. But I think fundamentally, we've seen banks now invest with the vision that eventually, when these issues are short term, but eventually all assets will sit on chain, and they will be able to reinvest stack both from an efficiency perspective in terms of exchanging value potentially, instantaneously, which will dramatically change, let's say, the counterparty risk, capital costs, the funding cost, and invent new business models, and definitely increase the velocity of collateral in the market. So there's definitely ways to really dramatically change how we exchange value. And then I think from leveraging tokenization can really have them reinvent their whole stack as they know it, basically. So we see banks now viewing, let's say, the tokenization, blockchain and tokenization as transformational for their longer term vision. We used to talk about everything would be tokenized as a vision, and I have a regular podcast called Mataco Talks, and it was at some point late last year I had even HSBC on it, which is a bank that's skeptical about crypto, as some of them, we know Jamie Dimon is in JP Morgan, and both those firms, whether it's HSBC or JP Morgan, view basically exactly that transformational vision that eventually all assets are on chain. We were at Sibos, and Umar Farouk, who runs basically Onyx, which is a 450 person division around digital assets at JP Morgan, sees this as transformational for the bank stack. So I do think that the banks see this not about crypto, not about Bitcoin, etc., but the tokenization, and for the banks themselves to play a key role in bridging the traditional into this new space. And the tech that will support it will enable the banks to be a lot more efficient, both from exchanging value and providing all the processes and intermediation they do as their core business, and really reinvent their whole cost structure as a result.
Yeah, and actually, Seamus, I had some technical issues. You might have seen it with the camera, but now it's working again. I think you're right, Seamus, but we are also saying this since a couple of years. The banks are understanding this, and they are coming, and so on and so forth. But to be honest, maybe we are now wrong saying this, but now I really feel that this is coming because banks are creating budgets and employing people, so they now understand what we are talking about here. A couple of years ago, it was PowerPoint level. Now it gets implementation level. That's my feeling. I might be wrong. Maybe.
I can. I'll just jump in just because you referenced what I will confirm exactly that. I think we've gone from this being part of the innovation department to this being part of the strategic part of the business. You have typically two parts of the business, which is run the bank and change the bank. And change the bank's about innovating and delivering new things. And we very much see this as a core proposition around transformation and change the bank. So I think it's very much investing in the space. Nobody's expecting this to be a short-term gain. It's going to be a cost for a little while because there's a lot of things to come in place. But the banks have a longer-term vision that this is the core future, basically.
I agree. Maybe Volker and Valerie would be great to have your opinion as well.
Yes. I'm happy to jump in here. I think it's compared to some years ago, I think we had already many ideas and they were spread very fast. And we then came to that big vision of, well, we want to tokenize everything, and securities will be very soon totally tokenized. And so that vision was very big. But now we are, as Seamus also alluded to and you pointed out, we're going much more on a much narrower path into production. So, of course, we have maybe even more resources, but they are much more focused. So the result and output of it to bring things into production takes really a huge effort, much more than just shouting out an idea or, creating that vision. So delivering these results and going down this path is really hard work, I can say, and that's why it is not as fast as we would have loved to see from the visionary point of view. So just delivering it, it's just a lot of work. And still, I mean, okay, yes, we can do things, but it's also not that we have massive teams. I mean, it's also very specific skills we need, and still a lot of education to be done.
Absolutely. Digital transformation is very much about education, right? Let's dig a little bit deeper here. In case we talk about tokenization, why at the end of the day do we actually need it? Why do we have to have tokenization? What's the benefit here? Who wants to take this question?
Philipp, I would like to say something to it, because there are so many inefficiencies on the market right now. I mean, we have a system which grew like the past 50 years, and all the big players adapted it, customized it, and adjust to it. And right now, we in the Web3 space try to disrupt this system and say, okay, we don't need central banks, we don't need central money, we don't need a central custody institution, and bring everything on the blockchain for a transaction. We don't need intermediaries to transform this transaction, and say we use technology to gain these efficiencies. So we try to disrupt a complete important sector of our business and our daily life, using a technology that has the possibility and potential to disrupt these spaces. And I would say the system, which growth like the last 50 or 100 years, made it a lot more difficult for new players to get into these markets, because there are few players who were very big and were very rich about the system. And right now we're trying to change that. And changing that is quite a task, but it's important for everyone, because there is potential on the market to gain efficiency, to gain possibilities to do new business models, see new types of assets, new structures, and to bring assets to a whole market, not to just a few players which are trying to block the rest of the market out of this space. But blockchain has the potential to make it even more fair on the market, and to make it accessible that new business models can get into the market and assets can be structured in a very fair and open way, so that a small retail investor and also a big institutional investor right now has the possibility to invest in the same assets. The asset itself can be structured with way more efficiency and end-to-end process, cutting out these intermediaries that make the efficiency losses, and use technology to improve a market or to disrupt the market. And I would say that it's worth the fight and it's worth the journey to do so, because it's in the end, technology always will get through, and efficiency gains will always get through. And the efficiency gains made by the blockchain and using tokenization, there's just so obvious that I would say we need tokenization on the market, and it will break through and it will disrupt the current financial market.
Yeah, let me quickly summarize it. I'm dealing with this tokenization topic now since 6 years, and have listened to tons of PowerPoint presentations there. So what's the core? What's the core? Let me know if I'm right or wrong. But my feeling is that tokenization is primarily around putting a digital security online, removing it from paper, so that you don't have the requirement anymore to go through paper-based processes, for example, via a notary, which basically creates huge inefficiencies. And why would you like to have this? Because then you can trade electronically. And when trading electronically, you can create a market, a liquid market. This all drives costs down, such that you can then have smaller assets being investable. You don't need the 100 million requirement from traditional capital markets. You can also tokenize assets below 100 million, and you make them investable, and you can allow trading them, because securities are running in a digital format, removing the requirement, for example, in Germany, to go to the notary all the time, right? Does this make sense? Am I missing something, or is it the wrong lens on this topic?
I think there's a lot of ways you can explain it. I think you've both done it very well. I would even simplify it a bit further. Please. And just get at the base. To me, the base opportunity, or the simplest opportunity, is being able to, if you put basically both the asset side and, as Valerie's pointed out, the fiat side, or the cash side, or basically both, or let's just say both sides of a transaction or tokenized, you can have instantaneous trustless exchange of value. And you think about our financial system as it is, the revolution we had when we immobilized securities and moved to a book entry system created a huge opportunity in terms of an explosion of volume and transactions. I think this will be revolutionary in the same way that basically it frees up all sorts of capital, all sorts of counterparty risk that has capital costs. It frees up basically the need to fund this business of settlement. There's been so much investment in making trading down to the nanosecond level as fast as possible. Meanwhile, it still takes 2+ days to actually settle the transaction. It doesn't make any sense. So you need to align that transaction and settlement pace, and that will transform finance at a very basic level in a very significant way, basically. So,
interesting points. Volker, Valerie, something to add?
Yeah, I would emphasize again on the fractionalization, as you already told. It's made accessible, and I think especially for asset managers, they can now provide kind of mass individualization. You can have small portions of, for example, real estate. You haven't been able to invest. You always have to have a fund, and you have some additional costs from that, and you can just pick the one you are interested in. And I think there is really coming a mass individualization on this end to the customer. And another thing, we always, when we talk about fractionalization, many people talk just about, we call it horizontal fractionalization. That means we take an asset and then we divide it by 10 times the or we divide it by 10. But the other thing is a horizontal fractionalization, that, for example, in real estate, we have the rent coming in and we can tokenize the rent. And on the other hand, we can tokenize the value of and maybe investors are just interested in the cash flow, and some are just interested in the value to be higher after a certain investment period. And I think there are many things to come, that you have the opportunity to have this traded. And I think there is definitely, from the retail space and from the investment space, a high demand in this, we call it vertical fractionalization.
Yeah, very interesting points. Valerie, any more points from your side?
Yeah, or maybe it can just, as you already mentioned, broaden the scope of potential investments and also include aspects and make them better traceable, like sustainability. The sustainability value of an asset can be tracked much better as soon as it is tokenized, and then also, somehow immutable on a blockchain. And this is an aspect maybe also important to note in these times. And finally, regarding the big disruption, I also see it more on an revolutionary path, even that it helps by having tokenization, using new processes, and exploring the efficiencies, that we even comply better with existing regulation, which is getting tougher and tougher, like the CSDR regulation on settlement discipline, which can be much better complied with if we have a tokenized system and processes and post-trade processes behind. So not so much the disruption, but that's more also following the path and the improvements which have been made on the system.
Yeah, I think to provide like an intermediary side here, yes, you can make processes more efficient. That's basically, it sounds a little bit boring, but it does work. But once you have done this, then it gets so efficient that setup costs can be driven down, and then you can, let's call it, capitalize new asset classes, right? I think this is very, very, very interesting, and it ranges from carbon credits to real estate and everything what we know. But we already had the discussion around tokenization of assets since years. Why did we not have, let's call it, large successes, right? To just name a few, security token exchanges have been the super hot thing a couple of years ago, and none of them still exist. So security token exchanges are fully gone by now. That's my feeling, right? Tell me if I'm wrong. But why has that happened? And in case we are now saying today that things are changing, Seamus, we talk about this since years. Why is now different, right? Why is now different? Is it the law? Is it budget? Is it understanding on decision makers levels? Is it regulation? Why does it not proceed like that? We have it in the past. Why do we really have a chance that this topic is really now getting a hype? Maybe.
It's a very good question. I think given how many factors you mentioned there, I think the main point is it's complex to get this thing moving, right? And there's a lot of things need to be aligned to make this work. And I think why now versus before? I think there's more focus on it, both from the institutional level, from the main participants in financial markets. We're seeing a lot more investment. We're seeing regulators respond to that and are starting to craft regulation. Even there is still early. I mean, I think Germany is so much further advanced than look at markets like the US, where they're still struggling over who the regulator is. You know, there's fights, inter-regulatory fights in terms of who should control the space. So, you know, I think there's a lot of things to align. I think there's alignment on vision now that blockchain and tokenization not going away. I'd say 2 or 3 years ago, there was a few crazies in the room saying everything would be tokenized. I think they're not the crazies in the corner anymore. It's kind of much more a mainstream point of view, basically. So it's a journey, and we're early. And you know, is it going to be 2 years? Probably not. Still, it's probably still a 5 to 10 year exercise. But I think it'll have very profound impact on financial markets.
Yeah, interesting point. Who wants to add something here?
I would like to add something. I guess the challenge of tokenization right now, or using blockchain for tokenized assets right now, is that you have a technology and you have, on the other hand, a completely fulfilled regulation of financial products. And using tokenization in the end, you have a financial product on the blockchain. So what the challenge is, that you need to bring the new technology in the already existing markets. So you have to find ways to create financial products with blockchain, which are fully regulated in the old and traditional market, to make it accessible and to make it functional right now, not in 5 to 10 years, Seamus. We have to find solutions that are working right now. And for example, Hardstocks managed to get the first fully prospectus for an equity product on the blockchain and get it authorized by 3 authorities, because we had a very strong focus on regulation, because the technology is there, the blockchain is working, and all the tokenization tools on the technical side are working. But what's missing is the regulatory part and also the infrastructure part, because when you have an asset on the blockchain, that doesn't solve any problems. It solves problems if it's regulatory accessible and also if it's liquid tradable. Then you have a holistic financial product. And this is what we tried to do over the last few years and did already, because the regulation, infrastructure, and technology must work together to bring holistic financial products on the blockchain. And this is the reason why tokenization didn't have the breakthrough we all expected. Nobody managed to do it until now. And there were always checkboxes that hasn't been filled. And it has to be our main focus to fulfill these checkboxes and to make a holistic financial product. And that's not just a technology or just not regulatory. It needs to be brought together as holistic financial product.
Yeah, I get it, but things are really moving, right? It's not that nothing has happened. You know, we have had Cashlink since years doing tokenization of, let's call it bonds, also in German Schuldverschreibungen, right? Then we have various companies now starting into the tokenization of funds business. We have a couple of companies registering the Krypto-Wertpapierregisterführung, Seamus. That's a German, very long word for the new license for tokenizing funds. So a lot of things are moving, but I would also add one more point. This applies to consultants, advisors, lawyers, banks, and also the regulators. That's basically education, right? Now you can talk to the people and have the same set of words, and you talk to them and they understand you. It's basically talking to them on par. And of course, you know, a new technology is coming to us, and it takes years until people discover it and understand it. So it also takes years until the regulator can respond, the lawyer can ask the regulator meaningful questions, and so on and so forth. I think and maybe this is something you cannot speed up. Maybe that's just a normal thing, how things evolve, and it just takes a couple of years until this education takes place on various levels. Volker, what about, would you agree here?
Yeah, totally. I agree on that. And I just wanted to add, we talked about fintechs and banks working in the space, but we just saw we have now the 4th series of the digital assets educating the executives. And we saw a shift. First, we have fintechs and banks, and now the asset managers are moving in, and they're moving in from both sides, from investing in and tokenizing, that bringing things to the market. And I think, again, the fractionalization and the smaller pieces have a good impact to the secondary market to provide liquidity on the assets that might not be, due to the size, have been that liquid. So we see it quite positive, that we see a shift, and it's always amazing what the people are telling us and bringing in their thoughts to the discussions and what they are working on. And the asset managers is a rising area, which gives us an indication where the market is going there.
Very interesting. So we have to restructure our program a little bit, right, and adjust it.
We already adjusted.
Okay. Excellent. Perfect. So we are also soon coming to an end here. So what are upcoming trends now? So what happens, say, next year, 2023? Will we see, for example, tokenization of ESG assets, you know, like windmills, solar panels, and all kinds of things? I think this could be a very interesting topic, because all this required infrastructure needs to be financed. It could be interesting for the tokenization domain, who knows? We had discussed also enshrining identity information in tokens. Maybe Volker, please elaborate a little bit more here, and then we do the entire round to all of you. And please be brief and add some points where you could see the market, the trends going.
Yeah, I would differentiate. On the one hand, we have one layer is a tokenization of assets, of rights, of ownership. There we have the real assets like yachting, shipping, cars, like hard stocks, the use case you did there. We have financial assets, we already talked about that, and there's upcoming the virtual assets, the assets we have in games, we have the whole metaverse things, the NFT, and these things, this would be virtual assets. I think there is a huge potential in there. And there is a second layer where the use cases have their core inside documenting things. As you said, that we have ESG compliant documentation. If you look at a forest, you can now document immutable what is used there in the forest, and 10 years later you can put it out. The same thing for real estate, what is built. There is a BIM, it's a standard the architects are using now. I think there are many things to come. And I would add that there's two layers. One is the tokenization of rights, that means ownership and utility tokens. And on the other hand is documentation. And by the documentation, you really can speed up the processes. Interesting aspects, yeah, that's the next edge. Valerie, what do you recognize as trends?
Well, I think there is appetite for institutional grade solutions definitely out there, according to surveys and observances in the market. So as soon as trusted counterparties are getting more and more active, maybe also based on the new EU pilot regime, we will see then more scale, and that will create a new dynamic. But in parallel, I'm still I'm still skeptical how fast also the cash side of things will develop, which I think is still essential for the fulfillment of all the benefits we have listed before. So that in parallel, it will not be a massive big bang and very fast scaling up, but depend also on that and step by step. That's how I see it.
Yeah, interesting points. Mentioning the euro topic again. Enno?
I would say from a market perspective, we will see even further market adoption, especially on the institutional side. So like the big banks and also the big institutional investors will even further adopt into the space. And from a product side, if you're talking about interesting products, you should register on hardstocks.com. As you mentioned, also ESG investments, for example, private equity funds and anything else will be published using our equity transaction way and equity tokenization way. And so there will be a lot of interesting products, but also more adoption on the market in the upcoming years.
And Seamus?
Well, I would echo some of Valerie's comments. I think it's not going to be fast, but I think 2023 we'll see more global firms announce that they're security services, asset custodians announce that they're investing and building solutions to this space. So I think you'll see some of the largest German markets announce similar initiatives. But importantly, I think one of the things that shifts is I think everybody will realize they can't do this alone. You can't create a securities market with one firm. There are going to be more and more cross-firm collaborations. I think those are going to kick off to work on focused and delivering standards in this market, so they can eventually create liquid secondary markets and bring quality issuers into the space.
interesting aspects. Yeah, I would like to add that I really believe that these ESG assets could be a very interesting domain, because we see more and more dynamic in this field. And yeah, I think it will be very exciting in the upcoming years. We have multiple players in the field. Last very quick question, because I primarily see what's happening, of course, in Germany and in German-speaking countries. Seamus, you are residing in Ireland, right? So you
Switzerland. Yeah, Switzerland.
Okay. But what's happening in Luxembourg and in the UK and so on? Do you also see things moving there?
In the UK, I think it's been a bit slower from our perception than some of the others. The banks have been a bit slower to adopt this space. It's been more tactical, but I think they're starting to wake up now. I would say we saw really the fastest movers in Europe and in Germany. I think largely because BaFin was very forward-looking, or sort of Switzerland as well, and Germany. But obviously financial markets are smaller in Switzerland. We've seen France emerge very quickly. UK is now starting to get more active, particularly as FCA has got much more progressive view in the space. I think it's all starting to move more broadly, I think, everywhere, basically. So I think it's a very positive backdrop. It's just going to take a little while.
Yeah, interesting. Perfect. So thanks much to all of you. Very interesting discussion. Also time-stamping today's status. Let's do this again in 1 year and see whether we have been right or wrong. And thanks to all of you, and looking forward to the next weeks and months and years.
Thanks, everybody.
Thank you, Philipp. It was a pleasure.
Thanks.
Thanks a lot.
Thank you.
Bye.